So good morning, good afternoon, good evening, everybody, depending on where you're joining from, and welcome to Leveraging Space Technology for Climate Risk Finance. Today, we're going to discuss how space technology can better inform us on climate physical risks and disclosures in emerging markets and developing economies. We have a great panel and some Ignite presentations for you today. So we're very excited that you're able to join us from all over the world. And thanks in advance to those of you who are joining us very early in the morning or very late in the evening. As we all know, climate change doesn't just threaten the environment. It poses risks to a country's businesses and economy, and it's increasingly influencing the behaviors of investors, financial markets, and financial institutions. Understanding these risks can be complex, and yet there are a growing number of initiatives, technologies, and tools that are now helping better inform decision makers about financial disclosure and climate risk management. So addressing this demand, the World Bank's Crisis and Disaster Risk Financing team at the FCI Global Practice has collaborated with the European Space Agency, ESA, and ESRIN on a joint technical partnership. The Global Risk Financing Facility, or GRIF-funded Crisis Finance Analytics Program, leverages innovative analytics at a global level, at a country level, and at a project level to create an enabling environment for improved risk financing and risk management. So we have 2 hours today, and our objectives are to raise awareness on the use of Earth observation data to quantify, manage, and disclose climate-related risks and highlight the financial exposure of governments, banks, and investors. We're going to look into identifying emerging needs in assessing climate physical risks from emerging markets and developing economies. We are going to work with our panelists to take stock of existing climate risk screening metrics and tools. And finally, also present new space technologies and latest innovations through practical use cases. So we do have a full and interesting 2 hours ahead of us. And I don't want to take, next slide, please. Too much more of your time. So I am going to give you a brief overview of the structure of today's webinar. So first, we're going to have our welcome and opening remarks. This will be followed by what we call Ignite presentations. So we do have these very short 5-minute Ignite presentations. Speakers who will be delivering the Ignite presentations, please do keep an eye on your chat because we will be keeping time and we will let you know as you're coming to the end of your 5 minutes. We have technical presentations and a live panel discussion, which will be facilitated by Antoine Bavandi, our senior financial sector specialist. We will have lots of time for question and answers, hopefully, but please do share your questions via the chat. We will try and collate the questions at the end of every session, and we will pose it to our speakers. If you have a specific question for a specific speaker, please do put it in the chat as well, so we can pass the questions out as you intended. Finally, post-event resources will be shared. So this event is being recorded, please do note. So we will share the recording as well as all slides from this event to everyone who is attending today. And a gentle request, if you are not speaking, please do mute your microphone as well as switch off your video camera. It really helps with bandwidth and helps our friends who are joining us from places where the network might not be as excellent today. Next slide, please. All right, so I know we're all excited to get started, and it's my absolute pleasure to introduce our first speaker today, our Global Director, Jean. Jean is the Global Director for the Finance, Competitiveness, and Innovation Global Practice, and he leads the World Bank's work to promote the development of sound, stable, sustainable, and inclusive financial systems. Jean's global team of experts work with governments and partners to make financial systems more resilient, to open access to finance for poor and vulnerable people, and to support economic activity and develop financial markets. So over to you, Jean, and thank you so much for joining us today.
Thank you very much, Kavya, and good morning, good afternoon, good evening, everybody. It's really a pleasure to join you on such a fascinating topic. It also happens that quite some time ago, I did an internship at the European Space Agency. So there is also, it's very personal for me to be able to come to this panel. And it was really, I learned a lot about ESA and space at that moment. So I'm going to try to be short so that you can get into the technical discussion. I mean, quick opening remark around 3 points. Why are we here? What's the demand? What can we get out of the innovation and the satellite data? And finally, why do we have this partnership with ESA and what is the scope of the event? So as we know, the average global temperature are currently estimated to be about 1.1 degrees Celsius above pre-industrial times. And based on current trend, the 1.5 threshold could be crossed within the next 2 decades, and that would have dramatic socioeconomic consequences. So why do we care at the World Bank? First, because emerging market and developing economies are the most vulnerable to these changes. For example, through rising sea levels, more frequent and severe floods and droughts, deteriorating ecosystem overall. And climate change doesn't just threaten the environment, it poses risks to business and economies, such as damage to fixed asset, changes in output, disruption to supply chain, shifting patterns in demand for goods and services. It is also increasingly influencing the behavior of financial institutions, markets, and investors. Therefore, the role of climate risk finance in this context is critical. A growing number of central banks and regulators have issued warnings on the impact of climate risk on the stability of the financial system, resulting from both physical and transaction risk. And for instance, that can come through increased probability of default, loan-to-value ratio, both at the borrower and portfolio levels. But the scale of the impact will vary across geographies, time horizon, industry sectors, and individual borrowers. They will also be influenced by various direct and indirect transmission channels through the economy, as well as changes in government policies and regulation on adaptation, and of course, the response of the insurance industry. That makes it even more important to produce evidence for the right intervention, and this is a real challenge. Identifying climate-related financial vulnerabilities at the portfolio level of financial assets is a very complex and uncertain exercise, and it requires quality and unbiased data to support sound decision-making. This is why innovation and the use of satellite data is so important. Remote sensing and big data now are allowed to collect unprecedented stream of observation following recent development of satellite technology in the past decade. High-resolution open source data are changing the way risk information is being processed. Coupled with dramatic advances in artificial intelligence, machine learning, and cloud computing, new applications are being developed, producing much needed insight into financial exposure and climate risk and footprint indicators. This is why the World Bank Finance Competitiveness and Innovation Global Practice can help client countries navigate through such risk analytics so that policymakers and public authorities are better equipped with critical information on climate-related risk and changes. Such information analytics can help unlock investment and financing decisions in emerging market and developing economies, especially in the current context where the world faces an enormous challenge of rebuilding economies devastated by COVID-19. So building back better, and this is really part of the discussion on how we exit from the crisis. At the same time, private investors, lenders, and decision makers are also see significant opportunities to meet the increasing demand for sustainable and green recovery. Addressing climate data needs with emerging country-specific consideration and leveraging new space technologies can significantly contribute to empowering institutions and investors to better manage climate risk and play an active role towards a more resilient and inclusive financial sector. Which leads me to my third point, which is the partnership with ESA and the scope of the event. So we are really pleased to have established this technical partnership with the European Space Agency Center for Earth Observation, so that we can leverage the use of satellite data for climate and disaster risk finance. The joint pipeline of activities supports ministries of finance, central banks, insurance authorities, and market worldwide to strengthen financial resilience to a wide range of climate crises and disasters with new analytics and risk financing mechanisms. These public good and analytical activities fill a very important gap between critical demand and highly promising technology, which is precisely the topic of today's event. We are very excited to see such a lineup of speakers, very happy to see so many participants, more than 140, and so that we can bring in critical expertise from various disciplines, spanning Earth observation and satellite imagery, climate and catastrophe risk modeling, as well as private insurance market, policy advisor, and institutional partners. So we are very pleased and excited to be partnering with ESA on this critical agenda and very much look forward to a very interesting and useful discussion, which is only one step in a much deeper process to push the agenda on climate finance. So thank you very much again for your invitation, and I wish you the best for today's event. Back to you, Kavya.
Thank you so much, John, for those very warm opening remarks. And with that, since you speaking of ESA, can I please invite Suzanne Mecklenburg, head of ESA's Climate Office, to deliver the next set of opening remarks. Just before I hand over to you, Suzanne, a little bit of introduction. Suzanne is responsible for promoting and increasing the use of satellite-based Earth observation data in climate science. Her current focus is the delivery of ESA's Climate Change Initiative program and developing future program activities with ESA's Climate Office as the focal point for climate. Suzanne has a background in hydrology and the use of ground-based radar to forecast rainfall for hydrological models. She was previously the mission manager for SMOS, Sentinel-3, and FLEX. So we are so excited to have you with us, Suzanne, and over to you, and really looking forward to your opening remarks.
Thank you very much for the introduction. Yes, thanks for bringing up my my slides. That's very kind of you. Thank you. Yes, first of all, what a great event, and thank you for the introduction here today. We are touching upon a very relevant and interesting subject today, given the ever-increasing risk that the changing climate actually poses. Climate change represents the biggest global threat of the 21st century, and that has been widely recognized by a number of major international initiatives, such as the UN Framework Convention for Climate Change, Paris Agreement, and many others. They aim at the most pressing, globally relevant requirements in addressing the effects of a changing climate. Now, one of the most important tools in providing the physical evidence base for a changing climate, but also providing information on how to address its impact, are observations from satellites. Environmental information from satellites are global and provide an accurate and comprehensive observation in a very timely fashion. And that makes them so unique and a fantastic tool to address the impact of a changing climate. Now, ESA is providing a multitude of different satellite observations. If you could please go to the next slide. As you can see from this slide, and please don't look too much into detail, the message that I would like to bring across from this slide is this is only the ESA-developed Earth observation satellites. There's many more, of course, from different space agencies around the world. But we are actually providing a large portfolio of quite different missions available that could help our discussion today. Starting from Earth Explorer missions, which are one-offs, novel science questions addressing and very unique technology that is developed under these particular missions. And then in the middle column, you see all the Sentinel missions that provide continuity, but also adjust to evolving user requirements through, for example, the new high performance candidate missions that are coming on over the next coming years. Now, the Sentinels, and this is a point that I really would like to make, are part of the Copernicus program, which is an endeavor jointly undertaken by the EC, ESA, and EUMETSAT, and it's the largest single Earth observation program to date. And here we are not just talking about amounts of data provided per day, like 150 terabytes of satellite data per day, but we are mainly talking about the large portfolio of different observations that serve a large and very diverse user community and their respective applications. Given the amount of data available, ESA and many other partners in the world are also looking into new technologies for this data manipulation in terms of cloud computing or artificial intelligence to basically address this big data paradigm. And we do this in ESA, for example, through our PhilLab in ESA, but also through future initiatives like the Digital Twin Earth, for example, in collaboration with the European Union and EUMETSAT and ECMWF. But ESA doesn't only focus on the actual provision of data, but also looks at the entire food chain of climate activities. Could you please go to the next slide? One of the keystones of ESA's climate activities is the Climate Change Initiative, for which I'm responsible, which has been running now for more than 10 years and is led by the ESA Climate Office. It's a unique scientific effort involving around 450 world-leading experts across ESA member states to generate global, multi-mission and multi-decadal datasets, which address meanwhile 22 different essential climate variables, which have been defined by the Global Climate Observing System, GCOS. These datasets, and this is very important for today's meeting, have fully characterized uncertainties and are validated using independent, traceable in situ measurements. They provide an impartial yardstick to understand climate processes and to improve and validate climate models, thereby enhancing the quality and the credibility of model predictions, which is important in the context of today's event, since it focuses on the potential of satellite data to improve the status quo in climate risk modeling, which is deemed to be considerable. Now, since 2019, ESA and the World Bank Crisis and Disaster Risk Finance team have established a long and strong technical partnership that fills the gap between the demand on the potential applications and integrations of Earth observation data into climate and into disaster risk financing. The primary objective is to increase the efficiency of World Bank operations and activities, leading to increased impact for the benefit of developing countries and emerging economies. And it also includes improved transparency and reliability of risk information, which will be largely discussed today in the agenda when you look around it. Well, beyond this partnership, there's also other activities in ESA, which I would like to point out. So ESA's activities specific to development and climate aspects are also covered via the Global Development Assistance Program and activities under EO4SD, Earth Observation for Sustainable Development, offering significant expertise to support the activities of the World Bank and its countries to better participate and anticipate and respond to climate risks using satellite technologies. So, in a nutshell, we are very pleased to collaborate with the World Bank Crisis and Disaster Risk Finance team and, of course, the broader development community. And I'm really looking personally also forward to today's event to see actually the application of the data that we are producing. And I wish you all a very constructive meeting this afternoon. Thank you very much.
Thank you, Suzanne. With that, thank you for those opening remarks. And with that, we go on to the Ignite presentation part of today. We have 4 Ignite presenters who are going to be presenting on a variety of topics. And can we please ask the Ignite presenters to stick to the 5-minute time limit? Also, do keep an eye out on your chats, and we will be timing over there, as well as reminding you as you come to the end of your presentation. For our first presentation today, we will have Marie Christina Thompson speak on hazard modeling and insurance. So over to you.
Thank you very much, Kavya. Yeah, no, I'm really pleased to be here today, and I'm particularly keen to share a couple of examples from a reinsurance perspective. As Earth observation, actually, there we've already been using that for quite some while to help us develop analytical solutions. And today, in these very brief 5 minutes, I will literally just show a couple of pragmatic examples to highlight more the innovative financial solutions that we can develop with that, as well as consider future trends. I will touch on some of the opportunities and challenges, especially in the context of emerging markets, and of course, how space technology will only grow in supporting the quantification of climate-related risks. On that note, if we can move forward to the next slide, the first example, very briefly in the context of underwriting here, severe convective risks of thunderstorms and hails in Italy. The use of hazard maps is very common in pricing for policies that are reflective of the risk that an insurance company is taking on, as you can see here on screen. We've used here a data set atmospheric reanalysis from the European Centre for Medium Range Weather Forecasts based in the UK, sort of roughly 30-kilometer resolution, and dates as far back as 1979. And that data set actually makes use of a large variety of satellites and sensors, from infrared, microwave, altimeter, on satellites like Meteosat, NOAA, TRMM, Envisat, just to name a few. And this data set provides some key parameters, in fact, to identify when convective storms develop, such as cape and wind shear. And using those, we basically, as you can see on the left-hand side, we've developed a index over the 40 years, showing the number of days where a specific threshold is exceeded. And by simply calculating some statistics and applying extreme value theory, we can then derive the return periods for each of the cells, not only for 2020, but by looking at the trend of the data. And this is what's playing in a sequence. You can actually then estimate what the hazard could look like in the coming years. And I wanted to highlight this study because it's obviously something very relevant in insurance, but also from a more forward-looking point of view, considering climate change and the way we can actually help our Italian clients in their underwriting strategy and to better understand their exposure to this type of risk. But moving on to another quick example on the next slide, please. So here, moving more into the context of emerging markets and developing financial instruments using parametric solutions, which not only offer, of course, fast payouts and support recoveries, but in fact enables us to structure and price for largely uninsurable risks from an indemnity point of view. So here in this example in Morocco, for flooding, especially, the challenge is actually to capture both the long-standing floods as well as flash floods, which makes it very difficult to detect, not only due to the terrain in this particular geography, but also the satellite repeat times. However, with evolving technology and more data available, we can actually use a combination of data sources and indices, as shown here on the slide, where we can combine metrics such as water extent and flood depths, for instance, using NASA's digital elevation models to calculate water depths, to identify the long-lasting floods. Together with rainfall data, again, for instance, using NASA's Global Precipitation Measurement Mission to target the flash floods. And so we can use these indices to define sort of payout mechanisms. So for instance, for water depths, combining that with exposure at a given risk location, you can estimate the loss amount, and with the rainfall, again, you can derive the return period hazard and define a threshold for payout. In my last example, so still staying on the theme of flooding, if we can just move on to my last slide, considering I've got a minute left, is looking at Rwanda. And this is an interesting example to look at a payout scenario illustrated on a historical flood, like the Kigali floods in December 2019. And here we're looking again at flood extents, but combined with design return period hazard maps for a given administrative unit to sort of define the payout thresholds. In terms of the inputs, especially for the flood extents to assess real-time impact, we've worked with our partners Cloud2Street, who've used a mixture of satellites like Sentinel-1 and 2 and Landsat-8, and involved a huge amount of data sets, a combination, I think, of 56 images throughout the December to identify that. And yeah, as I said, again, based on a threshold, say, of properties affected and using return period bands, we can define a payout mechanism for each of the administrative units. Just very briefly on the challenges, of course, mapping flood hazard, of course, there are obstacles, as I mentioned, the terrain, also calculating flood depths depends on the resolution of the data and is generally operationally more complex. I also wanted to mention inherent basis risk with sort of parametric payouts, where maybe the payouts don't cover the incurred losses appropriately, because it's easily to over and underestimate the flood risk due to the granular resolution. But I think what these examples have shown, that with the data from satellites and the technology available, that we can increasingly assess the optimum severity and offering relatively high resolution metrics. And so, yeah, just in conclusion, I think I just wanted to say that, I think these solutions will become more and more streamlined, evolving with technology to help bridge the data gaps and overcome concerns around data capture. And I really think Earth observation is absolutely essential in tackling the disasters globally and to provide these types of new innovative financial instruments to actually provide, the disbursement of financial support a priori before an event happens. But with that, I'll finish. Just some food for thought here for the audience. Thank you very much.
Thank you so much. So we just heard from Marie Christina Thompson on hazard modeling, and now we are on to our second Ignite presentation for today on mapping financial exposure, and we are going to hear from Georgina Esquivias from ImageCat. Georgina, over to you, please.
Thank you. Hi, everyone. I'm Georgiana Esquivias, and today I will be discussing the methods of mapping financial exposure. First, I'll describe how a development pattern database is created, and then follow up with the critical infrastructure indices. Slide. The basic process of developing a building exposure database consists of gathering numerous data sets and information regarding these 5 primary elements. Slide. Using the gathered population and building attribute data from national census and household reports, an engineer can begin to develop a mapping scheme that characterizes the typical construction type patterns for any given country. The level of detail within the mapping scheme will depend on the spatial resolution of the available data. This information is used to extrapolate or infer building counts, building areas, and construction types. In this Nepalese example, our engineers were able to make a direct correlation between the number of stories and structural types due to the availability of high-resolution building data. Slide. Here we can see how Earth observation data is used to estimate number of buildings and building areas through automated building footprint extraction. Combined with our sampling strategy, we were able to make a correlation between built area and household size. Slide. The replacement cost values are gleaned from various sources, which include building construction manuals and local expert opinion. The values are then estimated using the calculated building areas. Next slide. Now, dimensiometric mapping is a very intricate process that involves using Earth observation as weights to train a regression model. This model establishes the distribution statistics for reallocating number of people and buildings from an administrative unit area to a more refined grid cell, which is based on observed urban density and development pattern types. Modeling using Earth observation data and various machine learning algorithms allows us to further increase the segmentation of development patterns by construction types. This process plays a key role in identifying critical infrastructures and industrial assets that are vulnerable to natural disasters. In the images above, we can see how the industrial zones are detected by the machine learning algorithm. Next slide, please. By applying the building exposure development methodology, we're able to detect industrial or commercial production zones. And then when we overlay a global hazard database, we're able to identify localized indicators of risk. When we feed those production zones into a regional economic model, we can identify where and to which industries these localized losses may trigger a cascading economic event. Next slide. Here are a few examples of our critical infrastructure interdependency indices used to evaluate coastal surge and nuisance flooding. The Critical Infrastructure Interdependency Index measures how much international and domestic economic activity depends on a specific region's production output. This index provides a synthetic indication of the interdependencies within and across domestic and international supply chains. And it allows for the comparison between regions let's see, independently of how prone those regions are to natural hazards. Now, the Critical Infrastructure Interdependency Risk Index combines the interdependency index with local or global hazards. Hazard data is incorporated into the risk index through a probabilistic approach, while vulnerability is embedded into the critical infrastructure damage functions. This risk index allows us to compare and rank different regions according to their supply chain disruption risk level. And it also highlights regions where more in-depth analysis is required. Next slide. Well, this concludes my presentation, and I hope you found the information useful. Thank you very much.
Thank you so much, Georgiana, and that was very interesting. So we move on to our next presentation, which is on investments and footprint deforestation monitoring. And for that, we have Arjen joining us from Satelligence. So over to you, please.
Hi, thank you for having me.
Please switch on your video as well. Sorry, if all speakers could please switch on their videos while they speak.
Yeah, I'm sorry, I don't have the possibility to turn on video.
All right, no problem.
I cannot find
no problem, no problem. Thank
the
you
proper
so much.
button. Apologies for
right.
that. So let's get into the 5-minute show. My name is Arjen Vrielink, and next slide, please. What we do at our company is actually connecting this to next slide to this. So how is the peanut butter in your local supermarket related to deforestation? Because people don't feel comfortable anymore in buying peanut butter that's associated to illegal deforestation. And likewise, finance institutions don't feel like investing anymore in unsustainably produced commodities and products. So next slide. What we do at the company, we monitor deforestation risk with satellite data and the progress towards a zero deforestation commodity supply chain. And the way we do that, next slide, is by, yes, next slide, please. By combining a lot of satellite data. This is an example of a radar satellite image of Sumatra Island in Indonesia, and all the purple pink area that you see is palm oil plantation. And next slide. And from that we extract base maps that we base our change detection algorithms on. Next slide. So with these base maps, we can add the commodity planted areas, like in this case, the planted oil palm areas to distinguish oil palm replantation, for example, from real deforestation. Next slide. Because if you track these satellite images through time, you can detect where forest has disappeared, and not only where forest has disappeared, but also where plantations have changed. And then the magic comes. Next slide. If you combine this real-time on the ground information, what's happening to supply chain entities like concessions and mills, as indicated in this picture, then you can do risk modeling, quantified risk modeling of deforestation or environmental risks to your supply chains. Another example, next slide, of supply chain risk could be, for example, growth stages. So the greenest is an example in Ghana, or soil moisture as depicted in the graph above. And then next slide. You can quantify the risk. So in this case, on the left, you can see the natural forest and plantations events, the incidents, quantify them, and then propagate them through the supply chain. So if you're a cookie manufacturer, for example, in the US, you can see which of your traders pose the highest risk in terms of deforestation or other environmental factors from your suppliers. And then next slide. What is really the biggest insight that we did is that what we did is we translated these maps that you saw in the previous slide into simple looking graphs like this. And this is really nice for bankers, investments, agencies, asset managers, because this is a way they can monitor and assess their portfolio in terms of environmental risk, in this case, deforestation risk. So here we can see that overall from 2019 to 2020, the deforestation risk is decreasing, since the percentage of their portfolio being deforestation free is increasing. So these are good investments. The investments are having less and less deforestation risk. So this is a way they can monitor and also actively engage with the companies in their portfolio. So translating petabytes, basically literally, of satellite data into a graph like this, that's what we do. And that's also really the power of the satellite data available today, brought to us by, for example, ESA. That's it. I think the next slide will show some contact information. If you're interested, you can contact me or follow us on the socials. Thank you.
Thank you so much, Arjan, for that very interesting presentation. And with that, we come to our final and fourth Ignite presentation for today. The last presentation is on satellite services, insurance, and finance. And for that, I invite Hannah from Airbus Defence and Space. Over to you, Hannah. If you could please switch on your video as you speak. Thank you, if you're able to.
I don't have video. Yeah, sorry. So, yeah, today I want to talk to you a bit about how satellite services can support the insurance and finance market with climate risk assessment and adaptation by addressing the objectives of today's webinar. I've got 3 examples of services that we provide to insurers and lenders, and I'm going to discuss how the use of geospatial information and satellite imagery helps end users in each case. Next slide, please. So thank you. How are we at Airbus positioned and contributing already to this topic? It starts with the combination of all of the factors within our Airbus ecosystem: access to our own satellite imagery, geospatial intelligence systems, and data platforms. Airbus Intelligence operates a constellation of commercially available optical and radar Earth observation satellites. Next slide, please. Using all of these missions, we can provide wide area monitoring suitable for large-scale environmental measurements, right the way down to point target assessment for site-specific information, which is particularly useful, for example, for damage assessment and humanitarian applications. Next slide, please. So this takes me nicely onto my first use case, where satellite imagery and analysis provides evidence for insurers after a natural disaster event. With climate change increasing the frequency of extreme weather events globally, more remote locations or areas where infrastructure has not yet been established to deal with these extreme events, remote analysis using satellite imagery could be extremely useful for insurers. These sorts of analysis reporting methods can identify land access, secured areas, as well as provide cartography of the damaged infrastructure and even an evaluation of the damage costs within a matter of days. Enabling remote site inspection is key for these sorts of reports for insurers. Claims adjusters can identify key areas without having to go out into the field and can safely make decisions right at their desk. So on the screen, you can see how Smart Report uses imagery and open source data to analyze the effect of a flood event. So this sort of supports insurers after an event occurs, but what can we do to safeguard and prepare the industry before an event happens? Next slide, please. So this brings me on to my next use case, where I wanted to discuss a topic that's a bit more specific to UK insurers and lenders in the property purchasing process. As I mentioned earlier, in our Airbus ecosystem, we also use geospatial intelligence systems to provide answers to customers' needs. We've developed the Geospatial Financial Hub service that combines flood data from JBA and subsidence data from Cranfield University with address-based geospatial information to help support lenders make decisions right down to address level during the mortgage lending process. We can also provide portfolio analysis so that lenders can risk assess their back book. However, as a response to the new objectives set by the Bank of England to test the resilience of banks against different climate pathways and identify their exposure faced from climate-related physical risks, and in collaboration with these data experts, we can now provide data adjusted under different future climate scenarios. So the images on the bottom of the screen show the GFO portal displaying climate change, flood and sub risk for individual properties. So whilst this is a very specific use case, I think it can demonstrate 2 things. One, the use of good quality data. data that is trusted and has been developed by experts in their field, can close the data gap. We've worked with JBA and Cranfield for many years, and our height data even feeds into the JBA flood model, and they're a trusted data provider in the insurance market. And second is sort of to use a provider like Airbus, who's got the capability to manage geospatial data securely and provide it in a format that lenders can relate to. Next slide, please. So my final use case is more of an agricultural theme, but answers the needs of an insurer and a farmer in a developing country. As we know, drought is exacerbated by climate change, which threatens the sustainability of micro-farming businesses in developing countries. And through the UK Space Agency's International Partnership Programme, Airbus have explored the value that EO can bring to drought assessment in remote regions such as Kenya, in comparison to existing more traditional methods like rain gauges. It is impossible to accurately monitor drought on the ground at scale, and there are high costs associated with the in-field survey approach, which is used by insurers if a farmer wants to make a claim for drought damage and receive compensation. So we recently developed a solution called Field Finder. This uses machine learning to help delineate field boundaries from high-resolution satellite imagery, and not just the 10-meter resolution, which is used in the market today, which provides fundamental unit areas for crop assessment. With this, we then can use repeated observations to track the progress of crop health over a growing season, as well as detect if drought risk is likely. This information can be provided efficiently at scale through the use of EO to decision makers such as governments, banks, or insurers to help support populations at risk of food insecurity and enable compensation to the farmer in a timely manner. As a result, we can help protect farmers against the financial impact of climate risk. Next slide, please. So to finish, whilst these new methods are technically successful, I think it's worth keeping in mind that can be some skepticism in the uptake of some newer technologies. And I think whilst we've got great tools that are being developed, we certainly need buy-in from the end user, and regulation is always helpful in achieving that. But we've got some fairly established examples of EO and geospatial technology tools that can be adapted for insurers in the developing world. EO brings the benefit of remote analysis, high-resolution imagery, and high-resolution data close the data gap. And having geospatial capabilities enables data to be securely visualized for customers to gain a deeper understanding quickly. Thank you.
Thank you so much, Hannah, for that very interesting presentation. Just a quick reminder to all our audience, our Ignite presenters have very kindly agreed and accepted to record all the presentations which you just saw. So we will be publishing these as video blogs. And if you've already signed up to the Disaster Risk Finance Community of Practice, we will be sending these video blogs out to you in the coming week. So if you haven't, please do scan the QR code and do sign up for the Community of Practice. We do have a lot of events which we do through the year, and we'd love to have you join us and participate in some of these discussions. With this, we come to the conclusion of our Ignite presentations, and we are going to move on to our first panel discussion for today. Next slide, please. Our first panel presentation for today is about understanding the demand and about emerging needs and priorities in emerging markets and developing economies. But to facilitate this panel and also introduce our very interesting panelists for this discussion, I am going to hand over to my colleague, Antoine. Antoine's a senior risk finance specialist with our team. And in his role, he advises developing countries in designing and implementing disaster risk financing and insurance solutions through analytical work and policy dialogue. Antoine's a catastrophic risk modeling and management expert and has previously worked at Lloyd's of London, Allianz Global, and ESA. So Antoine, over to you. Please take it over from here, and a warm welcome to all our panelists as well for our first panel for today.
Yes, indeed. Thank you so much, Kavya, for the introduction, and many thanks indeed to our panelists. We feel certainly very excited to have such a wide range of expertise with us today. So we've separated out the discussion in two sessions. The first one will focus on trying to understand the needs and specifically the demand from EMDs. So without further ado, I will introduce you to each of the speakers, asking them a very brief question to hear their views on their specific topic of specialism. And hopefully we'll have time at the end of each session to address some of the questions from the audience. So please, speakers, could we kindly ask you to turn your cameras on? And let me again ask the audience to please ask questions using the chat. We will make time at the end of each session to address your questions. So first and next up, Unikrishnan, very, very happy to have you today. We know you're busy, in particular in this end of year crunch. Mr. Unikrishnan Divakaran Nair is the head of climate change at the Commonwealth Secretariat, looking after the climate change program. He was previously leading the Global Green Growth Institute of India and was a climate change secretariat officer at UNFCCC in Bonn, responsible for the climate finance and national adaptation plans. He has over 20 years of experience in the areas of climate change adaptation and mitigation, policies on climate finance, international accreditation to climate funds, including GCF, and expertise in climate vulnerability and livelihood in agriculture, water, and forestry. Unikrishnan, may I ask you how, in your view, Earth observation data could support countries, and particularly small states, access climate finance, and could you elaborate on implementation models specifically? I don't know if Unikrishnan, if you're muted, if you could unmute. Okay, apparently we're having trouble connecting with Unikrishnan. So let me move on to the next speaker. If Martijn, you would be so kind to turn your camera on, and we will go back to Uni whenever he's back with us. So Martijn, can you hear me?
Yes, loud and clear.
Good, excellent. So Martijn Regeling is a senior financial sector specialist at the World Bank. He's part of the financial stability team in the FCI global practice. He leads the bank's advisory services on climate and environmental risks for the financial sector, providing policy advice to regulators and supervisors around the world. He's currently working on projects in Southeast Asia, Southern Africa, Colombia, and Morocco, and leads bank engagements on climate risk in the World Bank IMF Financial Sector Assessment Program, FSAP. He also represents the bank in various NGFS and FSB working groups on climate risk. Previously, Martijn worked at the Dutch Central Bank and for Deloitte Consulting, focusing on the financial sector. Martijn, the bank is supporting many countries on climate risk assessments. Could you talk a bit more about these various engagements and elaborate on the data needs specifically and challenges you've encountered?
Yeah, absolutely. Thanks a lot, Antoine, for this kind introduction. And what a fantastic event. Let me stress that, to bring, well, people from space agencies, airplane manufacturers, and financial sector practitioners in one event. That's I think really unique, and I think innovation always exists where fields start to cross collaborate. So a lot can come from this. But let me highlight and explain a little bit what we are doing at the bank. So our unit in particular, where I'm from, supports regulators and supervisors globally on how to manage climate risks, both the physical risks that come from climate change, as well as the transition risks that are correlated with the 2-degree changes that we need to make and to realign economies with the Paris Agreement. So we provide specific technical assistance to these regulators on how to better understand these climate risks, as well as what type of regulations can you provide to banks and investors on how to manage the risks, and also how to set up a governance around it and disclosure practices within a bank, and then also the next step, how to supervise these. But it all starts with these risk assessments, which is basically really building the understanding and also the quantification that supervisors often need to then take further action. And also I worked on this at the Dutch Central Bank, supporting the chair of the Network for Greening the Financial Sector. So that's where a lot of the regulators come together and discuss these issues. It's also where a lot of the global demand now comes from. So all regulators learn about it and also want to understand it better, what they hear from their peers. So some of the examples, and that might be a good entry point to explain what we are doing, the demand is, I would say, very wide-ranging. So the needs that we get, the requests that we get, are very wide-ranging regarding the risk assessments. So we have very different scenarios that we work on. So for example, take South Africa, where we look at how drought has affected the financial sector. And we start with that, how is it affecting actually the regions? How is it affecting the economy? And then how could it affect the exposures of financial sectors to these different regions and industries? Another example is Philippines, where we work jointly with the IMF to develop a typhoon stress test. So here we looked at how the impacts of a 1 in 500 year typhoon event, how is that leading to economic losses? How is that then being translated into macroeconomic impacts like GDP? And then we start to link that to financial sector exposures to certain regions, as well as certain industries that could be very much affected. And we look at how that affects the balance sheet of banks, if that could affect their capital position. Colombia is another one, where we look at floods and how these again lead to disaster damages and economic damages. So I would say this is also one of the challenges that we face. There's a very large umbrella of things that we start to look at, and there's a lot of models that we need to link. And on top of that, we also need to factor in climate change. So this is very complex, and we get into a lot of data sources and a lot of models and a lot of expertise that we all need to combine to ultimately get to these financial sector impacts. So your last point around data, and of course the topic of today, we need a broad range of data, both the climate data as well as the financial sector data. And let me end with highlighting some of the type of data. First of all, we have the risk indicators, right? We map what type of risks are there for certain geographical locations, and that could be done on the type of climate data that was presented today. But what for us is very important as well is the economic losses that can come from it. Like take a flood event that can create a lot of losses also really at a geospatial location that you want to know, and you want to know them in extreme events, right? 1 in 500 years or 1 in 1,000 years. That's where the stress tests of the financial sector look at. So that's one thing. We need to have data over time so that we can start seeing if there's historical patterns where you would have a flood event that would impact then, for example, financial sector variables. You could take that coefficient or that impact coefficient to make predictions about what could happen in the future. So again, I also stress we need these data per geographical region and also sometimes per industry, right, to really see what's going on. And we then try to link that to the exposures and the data that the financial sector is collecting in terms of your loans and investments to certain regions, to certain clients, to certain industries. And we try to combine that information to get into some sort of picture on how climate effects impact balance sheets, how they impact profit and losses for banks. So that's a little bit what we are trying to do, and that's how we help regulators and central banks to understand these climate risks for their objectives around financial stability and soundness of financial institutions.
Thank you so much, Martijn. Very comprehensive, and you'll manage to stick to 10 minutes. That was fantastic. Thank you, and very happy to see that Unikrishnan managed to join us in the meantime. Thanks for making the time, Unikrishnan. You've been introduced, so I'm going to ask straight if you can hear me, and if you could turn your camera on if you have video. Krishnan, could you unmute yourself? Can you hear us?
Can you hear me?
Yes, perfect. Excellent. Thank you very much for making the time, and we can see you. So my question to you is how Earth observation data can support countries, and particularly small states, access climate finance, and if you could please elaborate on implementation models specifically.
Okay.
Thank you. And if you could try and stick to 5-10 minutes, that would be fantastic.
Yeah. Thank you very much. So thank you for this opportunity, World Bank, to bring the Commonwealth perspective for discussion. The Commonwealth Secretariat, under its flagship initiative called the Commonwealth Climate Finance Access Hub, is working in more than 15 member countries across the Commonwealth in supporting access to climate finance. So this is a mandate that the Secretariat received from the member countries in 2015-16 in its CHOGM at Malta. So this is basically being implemented by embedding national climate finance advisors in member countries and supporting the member countries in the process of access. So that involves a wide range of support from accreditation to human and institutional capacity building, to deploying advisor to work on specific adaptation and mitigation projects, both at national and regional scale. In addition to that, we also provide technical assistance moving forward with innovative financial instruments and financing mechanisms to the extent that we have started working on looking at the probability of using blockchain technology, for example, for demystifying the climate finance instruments or to increase transparency level, to just give an example. So the initiative that the Commonwealth Secretariat is implementing in the Pacific in partnership with Fiji, Vanuatu, and Solomon Islands, supported by the United Nations Institute of Training and Research and the UK Space Agency, is what we call the Common Sensing Initiative, which is basically a program that supports developing a platform. It's a GIS-based platform which generates data around multiple aspects. But what I'm going to talk about is how the Climate Finance Access Hub is utilizing the data to develop information, because data is available, but you need to very in a customized manner convert that data to information, and those information that goes into high quality proposals, and that makes it bankable ideas. So the Climate Finance Access Hub has deployed climate finance advisors in the countries. The advisors are working very closely with the national focal points as well as the focal ministries responsible for climate finance access in terms of using this platform, the data available from the data cubes, as well as the applications to convert them to information that justifies the proposal. So, for example, we are currently working with the government of Fiji in its layout of the e-bus electric bus strategies in Fiji. Similarly, we are looking at proposals in the ocean and also in the land and the ocean intermediate zone, especially in terms of utilizing this data. So this is basically a beginning that we have made by utilizing the platform to justify proposals. We find from the independent evaluations units of the Green Climate Fund and the Adaptation Fund that the clear justifications around project with clinching evidence is what is basically lacking in many proposals, leading to multiple back and forth, leading to delay in sanctioning. So that's what basically we are trying to bridge. So for that, in addition to the kind of advisory support that we provide, we also build the human and institutional capacities. In the institutional capacity bit, we are trying to work with the government of Fiji in mainstreaming this platform into the governmental system, because you can be supporting it for many years, but how do you integrate this? And also, how do you have the kind of human resource strength and trained human resource strength, or the critical mass of human resource, considering the way there is a rotation of staff in the governmental system to maintain such kind of things in the long term. So we are working with the government in terms of mainstreaming. So we've set up what we call a project development unit. Blueprint was provided to the government of Fiji, and now that's currently under multiple stages of approval. So this is an example where the Climate Finance Access Hub with the hub and spokes model is actually facilitating the process of data use and to convert the data to information and to learn from multiple countries within the Commonwealth to enhance and to make the proposals as robust as possible, so that it actually takes lesser time in its approval process. Yeah, that's the kind of quick input that I would like to provide, and thanks again for this opportunity, and I will be happy to take any questions moving forward. Thank you very much.
Thank you so much, Unikrishnan, and it's great to have your specific angle on implementation at country level, and particularly these aspects of capacity building, which is an ongoing concern, I think, to most of us, particularly when introducing new technology. Very pleased to introduce now our next speaker, and we will get back to some of you at the end of the session based on the questions we are getting. So very pleased to now introduce David Carlin. David, if you could turn on your camera, perfect, and just test your audio to make sure you're with us. Perfect. Yes, loud and clear.
Wonderful.
Thanks. So David leads the TCFD, so the Task Force on Climate-Related Financial Disclosures and Climate Risk Programs for UNEP-FI, UNEP Finance Initiative. He currently is running a pilot for nearly 50 global banks and investors on the topic of climate scenarios, climate risk assessments, and climate governance. Prior to joining UNEP-FI, he worked as a senior manager in risk and public policy for Oliver Wyman and in model risk management for PNC Bank. His background is in quantitative modeling and decision science. Thanks very much for making the time, David. I have actually a couple of questions for you. The first one is, how can financial institutions, particularly in EMDEs, effectively address climate risks in your view, and particularly in data poor environments? And the second one is, what are some of the open source data sets, including satellite data, including ESA or Copernicus data sets, that institutions should be familiar with in understanding physical hazards, but also more broadly speaking for financial risk, opportunity, and resilience planning?
Great. Yeah, thank you so much. It's great to be here, and such a fascinating topic to work on, thinking about what role data can play in helping to address our environmental challenges and also improve lives through better understanding of some of those challenges. So I think it's interesting from where I sit, because very often I will have people say to me, we don't have the data, and so we would like to do that type of analysis, but do you know any data set that exists for this or for that? And I'll talk a little bit about some of the publicly available data, but it's really more about how we leverage that data. But my main point is, quite often amongst financial institutions, there's sort of a view that imperfect data is itself a limiting factor, that we can't integrate our climate work into decision making, that we can't take our ESG insights and make them strategic without better data. But unfortunately, I think the truth of the matter is, the fundamental definition of risk management is to deal with a world under imperfect information and limited information. And that's not to say that you don't look for data, and I'm going to speak a lot about some of the exciting developments in that data space, but it may not be the exact data that you're looking for. It may require processing and understanding and drawing inferences in ways. Very often people want sort of the file that has the information that will tell them what the losses are going to be, or will tell them who is likely to default and who isn't. And especially the more data sparse a industry or country is, the tougher that information is to really get. And instead of having that be an excuse to throw up our hands and say we can't do anything, I think this is where new forms of data and publicly available data can really become interesting. And so when we think about the financial industry as a whole, and we think about the information collected, say, at the origination of a loan or the initial information, typically there is information there, but whether due to poor policies or due to lack of requirements to do so, it may be data that is not new, it may be data that is not granular. And so as a result, this is where some of these more powerful new tools and types of data can be particularly insightful. And with climate, there is so much observational data, whether it's the work on remote sensing, whether it's work on understanding deforestation through things like LIDAR, actually measuring how much of a forest is has been damaged. It's certainly tough to go into the middle of the Amazon and understand levels of deforestation. And in some ways, these can be used as verification mechanisms as well. One of the big interesting stories that I think about on this, of course, methane is one of the major contributors to global warming. And one of the realizations over the last few years has been that fugitive emissions, so the leaking of methane, which is significantly more damaging because it releases methane as a gas rather than in its combusted parts of carbon dioxide and water, that fugitive methane may actually make the footprint of natural gas significantly worse than it has been assumed to be. And as a result, you could really have a relative trade-off between coal and natural gas in terms of their emissions footprints. But how did we find that out? We found that out through detection from probes like those from ESA, from those like NASA. And interestingly, we even see this influencing policy. A few months ago, we saw Vladimir Putin actually make a point about the importance of dealing with fugitive methane emissions. Certainly, few would consider him a climate champion, but the fact that this was brought up as an issue that the leader of a major oil and gas state would bring up was largely on account of the fact that detection was done to notice some of these large leaks of fugitive emissions in Russian gas. And so what to me that says is there are really important uses for what I would consider newer or non-traditional data in the area of detection. And that can be on the ESG side, so not just pressure on people like the Russian government, but also on questions of palm oil. Is this being sustainably sourced? As I mentioned before about LIDAR, can you look and see, maybe it's not you doing the seeing, but from these images, can you understand, or rather from the data that comes out, whether deforestation is occurring, whether something is being sustainably sourced? And these are in the places that are hardest to reach. These are in the places that are perhaps the least well connected. And so I think detection is an important one to understand whether companies are abiding by things. It also ties to an accounting of one's own footprint. I think the time has long passed for institutions to say, oh, well, we didn't know. It now becomes your business as a financial institution, if you're providing financing, to know about the practices, about the emissions, about the environmental and governance practices of the companies that you provide funding to, whether they're your portfolio companies or your clients. And so I see that area of detection and reporting being important. I also see the physical data being very important. And this is getting to these questions about hazards and about economic impacts as well. When we think about storms and we think about changing climatic conditions, obviously predicting any particular event in any given time is incredibly difficult. And it's something that, other than having a few days, in some cases, a few weeks of warning for certain events, we can't forecast, say, how many storms there will be in the Atlantic Basin in 2027. But with big data, what we can begin to do is really look at averages and look at changing levels. So this idea of incremental risk, even manifest by extreme events, can be taken into account much more effectively by understanding the degree of storm surge. A good example of this that I'll mention is understanding sea level rise during Hurricane Sandy. The fact that sea levels had risen nearly a foot from pre-industrial times contributed to the flooding of 84,000 other homes that wouldn't have otherwise been flooded during the storm. These are kind of inferences about the physical systems, about the physical geography that don't require one to predict the single event, but require multiple observations, dozens and hundreds and thousands of storm observations, of sea level observations, to understand really how means are shifting. And when we think about institutions, while it's super important to me that my home is not in the path of a hurricane, for a diversified institution, the real question is, what are the levels of my losses? How much do I need to hold in reserve? How threatened am I systemically by these risks? And the best way to tease those things out is on a big data level, on an insightful level, looking at multiple hazards and how not only the means, but also the variances of them change over time. And that information, I think, comes from the thousands, and in some cases, millions of observations that are being used. And the great thing about this, whether it's through ESA or through NASA or through, in the US, places like NOAA, the National Oceanic and Atmospheric Agency, or the World Meteorological Organization, or the Met Office in the UK, you have so many more data points. And the question now is, how do we integrate them? The challenge to my mind is, you may not have great data on a client, but you can get a better sense than ever before on the levels of different impacts, on the potential pathways. And the goal is not to pick the right pathway. Again, risk management, if we knew what pathway we would follow, then it's not really risk management. We would just put away the amount that we would need. You know, if you know a movie is $10, you know if you have $10 in your pocket, you're going to pay for the movie. That's not what this exercise is. And so being prepared under many scenarios is really the crux of the exercise. And the way to do that is to use this data. And so those are just two ways that I see data being used. Some of the exciting things that I'll just hint at before handing it back to Antoine are thinking about more operationalized models around machine learning, also on infrastructure and resiliency. So where there are disruptions, I particularly enjoy the story. Obviously, it was unfortunate globally, but how many people understood that the COVID pandemic was spreading in China before it was publicly acknowledged due to the decrease in atmospheric pollutants in certain factories around the Wuhan region. And so these are kinds of insights that we can begin to get about business resiliency, about the impacts economically, that maybe otherwise, yes, it would be easier if at the end of the month people reported their revenues to you. But we have to recognize in this world, there's so many other ways to get the information we need. And finally, the last thing I'll say, just as a big plug for our hosts, of course, ESA has great data. As far as tools to play around with that are free and open source, the World Bank really has an incredibly rich repository of those. And I highly recommend them as a way of beginning your understanding of the risks an institution may be exposed to. So anyway, with that, I'll hand back to Antoine.
Thank you so much, David. Very rich intervention, and you've been very concise as well. Which leads me to asking you, panelists, one or two questions. We have 5 minutes. There's one question from the audience on priorities. We've been discussing footprint emissions, we've been monitoring, we've been discussing sort of financial risk management. If we sort of focus on risk management and look at the different components of financial risk management, which are exposure understanding, hazard modeling, vulnerability, financial vulnerability modeling. In your view, what is the priority? What should be the priority for, let's say, an emerging market keen to sort of start understanding and start thinking about managing financial risk, particularly from physical risk? Should it be exposure because it helps sort of raise awareness on concentrations of risk. And it's maybe the starting point in terms of the first sort of logical step in the process, or should be on financial vulnerability mapping, because we know this is complex, and this sort of makes the link between the financial sector impact and the sort of climate and disaster shocks. Any views from either of you on what could be an entry point or should be a priority?
So maybe
Sure.
I'll just.
Yeah.
Oh, sorry. Maybe just I'll go first just to say quickly. I think risk identification is the first step that an organization should undergo. And the nice thing is that a lot of that can begin relatively qualitatively, but really making sure that we have a full accounting of the challenges we face across all ESG risks is really necessary before we dive deeper. I think very often people look for the data or work with a provider and get data and then don't know how to interpret it. And I think a real theory of action and integration means starting with an understanding of what risks may present themselves and then pursuing methods to then quantify, analyze, and ultimately manage those risks. And so I think a lot of times people are saying, oh, well, I have these 7 different climate risks and I have these environmental risks and I have this worry. And I think it's important to understand first which of these are qualitatively going to be both most immediate and largest, and then spending the analytical firepower on developing those further rather than trying to make sense of a large amount of data without context or direction.
Yeah, let me quickly add to this because I think this is perfect. So this is also how we do it. I mean, start first qualitatively exploring which climate and maybe broader environmental risks, are material for your financial sector or your financial institution, and use the information that is available, like David also, presented. And then I would say the next step, the easiest next step, is start comparing some of that hazard mapping or whatever you have with the exposures that you have as a financial sector or a financial institution, right? Because that's the type of data that you likely have, right? The regional exposures and the industry exposures, you can map that against the identified risk. Then the modeling itself is, I would say, the next step, and that takes a lot more resources and insights, but you can already get a quite good picture before that based on the information available.
Thank you very much. That was exactly what I expected personally, and I hope it was really enlightening for the audience as well. There are many more questions. I'll maybe just mention one, which is on what sort of open satellite data sources are available. And I know some of our client countries joined today's event. I will kindly ask Fabio or Dora to provide on the chat maybe links to the essential climate variables from the GCOS, the Global Climate Observatory, that is at least a good go-to reference place to start exploring these 60-ish essential climate variables, including, I think, 2/3 based on satellite data, which Suzanne actually highlighted in her opening remarks. That could be a good entry point, and we are more than happy to provide more information. Obviously, feel free to reach out to us. Time to move to the second session. So Penny, if you could share your screen and show our lineup of speakers. So the second session is going to be on bridging the gap between technology and that sort of demand, those priorities we talked about. So without further ado, I think we have Fabio Natalocci with us. Fabio, if you could just turn on your camera. Perfect. Sure. Excellent. Very pleased to have Fabio with us. So Fabio Natalocci is a Deputy Director of the Monetary and Capital Markets Department at the IMF, responsible for the IMF Global Financial Markets Monitoring and systemic risk assessment functions. He's responsible for the Global Financial Stability Report that gives the IMF's assessment of global financial stability risks. And he also happens to co-chair the NGFS workstream on bridging the data gaps, which is highly relevant to our topic today. Prior to joining the IMF, Fabio worked at the Federal Reserve Board, as well as the US Department of Treasury. Fabio, thanks very much for making the time. My question to you is the following. Considering your current role and your involvement through the NGFS Data Gaps Working Group, what would you say are the critical data gaps when it comes to climate risk information, particularly for developing countries, possibly highlighting the role of the NGFS in that context, and how you would see satellite data contributing to this agenda?
Right, so thanks, first of all, thanks for the invitation. It's a pleasure to be here and talk about data, climate data. So I think there is at this point, recognition that the transition to a green economy is essential to avoid potentially catastrophic climate outcomes, right? And there's a lot of momentum building, but also more needs to be done, right? So if you look at the 1.5 objective of the Paris Agreement, under current policy will not be met, even under the most optimistic scenario. So clearly we need to do more. COP26 hopefully will galvanize the international community, but more needs to be done. And the financial sector can play a role here in terms of pricing climate risk and in terms of allocating capital to sustainable finance. Investment fund, a number of sectors are crucial here, but there is a data issue in the sense that there are persistent gaps in terms of climate data. And this is true across different possible stakeholder objectives, right? Whether this is about financial stability risk and what central banks can do, or what we do in the Global Financial Stability Report, whether it's about pricing climate risk in markets, whether it's about risk management at financial institutions, or also taking advantage of sustainable finance market. And you can see in there, for example, TCFD report, where the share of firms reporting, particularly in SME, it needs to improve, obviously. And then there are specific challenges in emerging market. I think the way we look at this at the fund, it's in terms of what we call the climate information architecture with 3 blocks, right? We need high quality, reliable, comparable, consistent data. The second block is an harmonized set of consistent climate disclosure standard, and then possibly some broadly agreed upon global minimum taxonomy. I think on the standards, there's an acceleration of process there. The IFRS effort, IOSCO, other standard setter, possibly going towards some global sustainability standard. Taxonomy, I think more work needs to be done. And again, taxonomy here means different things, and it's sometimes a little sensitive terminology. But even if you just consider that in terms of like commonly agreed terminology, right? We can at a minimum come up with some sort of like global principle in terms of what the taxonomy should be doing. But even with that, I often make an example. I suppose that you magically can get the one disclosure standard, one taxonomy overnight. You still need to work on the data, right? One taxonomy, one standard would not be enough if you don't have good quality, granular data, reliable, comparable, that can be verified. Standard and taxonomies by themselves are not enough. So the way we look at data in the NGFS interim report that was released a few weeks ago, it's in terms of like a user-centric approach. So trying to identify essentially who the stakeholders are, what kind of needs they have, what are their use cases, what metrics can they use, and the data items. And that helps us to essentially match data needs to data availability, and that implicitly gives the data gaps. So in the report there, we have identified 6 stakeholders that goes from central bank, supervisor, banks, pension funds, insurer, and investor more broadly, and use cases ranging from exposure quantification, investment lending decision, macroeconomic modeling, financial stability, climate-related disclosure. And we try to map those. And I think it's important because when you talk about data and data needs, it depends who the stakeholders are and what the users are for and what's the purposes, right? And in some cases they overlap. In some cases, for example, you can think of like I can use aggregates. In some cases, I don't need as granular data. In other cases, you do. So clearly identify the stakeholder and the use case is crucial there. So what have we learned so far? I think one thing is that, first of all, it's a very, very crowded landscape. I can tell by the number of events being invited now. So there are a number of international financial organizations like FSB, IPSF in Europe, OECD, the IMF itself, the World Bank, and the list continues. There are standard setters working on this, so IOSCO, IIS, IFRS, the 5 Alliance of 5, and also all the private sector initiatives from CDP, TCFD, PRI, SASB, open source climate, and other private sector. And what the NGFS is trying to do, I think, is bring a unique viewpoint. It's a very broad range, wide-ranging membership with different missions. And also, again, we try to focus on different stakeholder needs, right? So some of the other efforts, like take the FSB, for example, is very squarely focused on financial stability objectives, right? So we try to range across the different objectives and uses and map them to data needs. So that's one point. The second point is about data themselves, right? So where are the largest gaps? One clearly is about forward-looking data. So if you think in terms of TCFD pillars or recommendation, in terms of metrics and targets, that's where you see some of the big gap, the forward-looking part of it, particularly in terms of, like, I don't know, targets or emission pathways. There's also limited availability of and granularity of data, right? This is whether this is carbon data in terms of scope 3 emission, for example, or, and that's going back to your question about the spatial data, the geographical data in terms of asset location and project, both for physical risk as well as transition risk, right? So I joined a workshop by the European Space Agency, and I thought it was very helpful. I learned quite a bit, actually, in terms of already how satellite images and geospatial data are being used by insurance company to pin down project asset location and link it to specific climate hazard and events. It's a very helpful information that actually could fit into the data work. The other thing we learned is that stakeholders are actually calling for assurance in terms of quality of data, right? In terms of verification, auditing mechanism, and that's an important part. And then there are some of the technological issues, right? In terms of data accessibility, what system do you have in place? When you talk to corporates, that's a very clear message. One large corporate told us we have 70,000 different firms along the supply chain for us. So how can I collect, first of all the information? Right? Those are a lot of firms. Even if I'm able to, in some cases you have challenges because some of them are in emerging markets, some of them are SMEs, so they have their own challenges. How do I put it together? What system do I have in place? So technological solution like open source is a good example. They can be used for data collection, for sharing software. Also other technical solution like machine learning technique, right? They can play a role in making scattered information available in a structured way. And so to conclude, the way that we're thinking about the report here is about a repository where, and when I mean repository, I don't mean like a portal where you go, you log in and you get the data for free. What I mean is a place where you go and you can match the data needs with data sources. So if I am this specific stakeholder, I have these use cases, what data do I need and where I can find them? And now the challenges, and we haven't come up with a final recommendation in terms of the NGFS report. The final report will come at the end of the year or early 2022. But how to think of this repository? Is there a public utility? If so, where should be housed? How is it maintained over time? And or how to lever what the private sector is already doing in terms of technology. There are already a bunch of platforms / repository in the private sector. There is the issue of like open source sharing. So how can we lever what is done in the private sector? And that's how the geospatial data come in. Like, what role can they play in this repository? How would they fit into the repository? How would we get them? And so maybe that's a question back for the participants to this panel. How can we make sure to catalyze and bring this data, make them available, broadly speaking, for assessing climate risk?
Thank you so much, Fabio. That was very, very interesting. We've been following very closely what you had to say, particularly on work in progress with the NGFS working group. Yeah, highlighting the huge variety of use cases and stakeholders, and also the plethora of supply. I think these are important elements, and I can see a few questions in the chat on for which data sets are we supposed to be using? Is everything free? Should we focus on hazard? What's the link between hazard data from satellites to impact on financial institutions? So clearly there's a need for not a user guide, but user guides to address all of these different, let's say, needs and applications. So I will maybe ask Nicola and Matt in their presentations to try and also address this question of what practical data sets have been used in their experience and to what specific application. But hopefully we'll have some time at the end of the session for questions. So thanks, Fabio, and please bear with us. So very pleased to now introduce you to Nicola. Nicola, could you turn on your camera and just say a few words to make sure the audio is working?
Hi, Antoine. Hi, everyone.
Perfect. So very pleased to introduce you to Nicola Ranger, who's Deputy Director of the UK Centre for Greening Finance and Investment, and also Head of Climate and Environmental Risk Research, Sustainable Finance Programme at the University of Oxford. Nicola has almost 2 decades of experience working across government, industry, and academia around climate and crisis resilience and risk analytics, including previous positions at the World Bank, FCDO, LSE, RMS, and the UK Treasury. Nicola, we've heard examples from insurance industry applications that are fairly advanced, particularly on anticipating these extreme events. What have you learned from your experience of supporting developing countries and financial institutions to build financial resilience to physical climate risks specifically? And how is this informing the work of the new UK Centre for Greening Finance and Investment?
Thank you, Antoine, and thank you for the invitation to speak. So I'll answer that question. I will come back on some of the points that Fabio made at the end there, because I think that's an absolutely critical point. And when I speak with financial institutions, this is the big question that we get. So we often hear, actually we're swamped with data. What do we do with this data? What data do we use? How do we use it? That's the biggest problem. And actually that's what this new centre, the Centre for Greening Finance and Investment, was set up to help with. And it's always tempting to add to the melee by providing more data sets and things, but we're trying, our focus is really on how do you use the data that is available now? So how can you, what sort of metadata can we add to that to help people to interpret it? What sort of guidance can we provide? And that's really what we were set up to do by the UK government, because they saw this as being the real need and asked from financial institutions. But before I get on to that question then, so to answer your question, Antoine, so to where I come from on this then, so I started life as a climate scientist. So my PhD was on using Earth observation data, very techie, but actually most of my career, and particularly the last 6 years, has been spent working with financial institutions, both public and private, to help them manage physical climate-related risks. And most recently with the World Bank, working with central banks, and now in the new centre working with other types of financial institutions as well, everyone from pensions funds to insurers to banks. So what things have I learned through that experience? So one, and particularly now looking more at banks, central banks, other financial institutions, different to insurance. And I think that that's quite an important point to make, because one thing that I've learned is that the data needs are actually very different between the different users. So one clear thing is that, and I think David made this point really well as well, I think the starting point has to be to understand what's really driving the material financial risks. And I think this is a really important point to make, because I think that we're sometimes getting stuck on developing different risk metrics, starting bottom up in terms of trying to gather all this data. But actually the first point is to understand for financial institutions, what has really driven your material financial risks in the past, and under what scenarios in the future could you be really affected, particularly on the physical risk side. I think that's absolutely critical. And once you understand that, it then helps you prioritize the analysis going forwards. I think unless you start with that, you can miss really important risks. And I think you can also be bogged down in the data as well. Now this, what I've learned is that when you take this approach, what you see, particularly when you're talking to banks and central banks, which is very different to insurers, is that the real risks are coming from not necessarily this particular asset is affected by a flood, or this particular agricultural area is affected by a drought. What's really driving the risk is how all of those different things interact, and the indirect economic effects of that. So these sort of cascading risks are there the things that are really impacting on the financial sector. And I think that's where this is very different to insurance, because when we work in insurance, which I have over several years, and Antoine and many of the others here have, you're really looking at individual assets and what's the risk to those individual assets, or infrastructure, buildings, for example, and trying to calculate in a very precise way the risk and price that risk. But when you're thinking about a whole financial sector or a bank, you really need to think more at the portfolio scale. So what's going to really impact that portfolio? And here I think we need a slightly different approach. And yes, satellite data is really important for that, but we need to bring together different types of expertise as well. The next point that I want to make is, and again, this might suggest that satellite data has less utility, but that's not the point that I want to make, is that the past is not a good guide to the future. And again, I think that we focus very much on analyzing risk today. But again, the key thing when we're thinking about climate change is to think about what are the scenarios going forwards that could happen, that could have a really big impact on a financial sector. And that scenario-based approach is really important. Obviously, that's something that the NGFS really advocates for as well, which is good and is core to approaches to stress testing that we're very used to working with. I think that does require a different approach when we're looking at how we use data. So the satellite data is a starting point, but then understanding how that then translates into risk at an economic scale, the vulnerabilities of a system to those driving factors, and then how that then can play out in terms of different scenarios, I think is absolutely critical. So I think those are some key lessons that I wanted to convey. And in that context, satellite data is still incredibly important as an input to that, particularly in emerging economies. So for example, one of the things that I've learned through working with financial institutions is that even understanding where assets are that are owned, where the exposure is a real gap. So it was great to see some of the examples earlier in the Ignite presentations of some of the satellite technologies that have been used to identify where assets are to enable this sort of risk assessment. And I think that particularly for emerging economies, those sorts of technologies to understand the exposure are really important. And then on the assets, on the hazard side as well, obviously, all of the innovations that we've seen today in terms of flood mapping, tropical cyclone tracking, etc., all of that has to feed in to these understanding of risk at a global scale. And that granularity of data is really important. I think this was another point that David made, understanding the concentration of risk. And that's, again, where the satellite data and higher resolution data and new techniques like machine learning are really important to process that, to understand those concentrations of risk that can drive more systemic effects. So coming on to finally then, this bridging the gap point, which I think is really important. So this, I think, is one of the biggest challenges that we face at the moment. We have, on the one side, a huge amount of data and knowledge on the risks from a number of communities, from the Earth observation community, from the economic community as well, from the financial stability community. And on the other side, we have financial institutions that have a deep understanding of their own vulnerabilities, but in many cases do not yet have the big teams that are needed to analyze this data and to understand that, particularly in emerging economies, not so much in the high income countries now. So how do we bridge this gap between them, I think is really important. And there we can learn from a lot of the experience in the past, from insurance and from other areas about how we do that. And I think that intermediary organizations can play a really important role there. So we've heard from some of the key ones here, but I think, coming back to Fabio's point that he made at the end, I completely agree. We need entities that can provide information, I think, in an open and transparent way. I think that there's a role for a massive role for commercial providers, but I think there's also a really important role for open data providers that can provide information in a much more transparent way and with very consistent standards. I think that's a real challenge at the moment, is around consistency of data, transparency over how you can use data, what you should use, what you shouldn't use. So I think I'll pause there. I did have some slides to show, but I think I'll let Matt show you the cool stuff.
Excellent. No, I was just about to step in, but it was very, very interesting, obviously, to listen to you, and thanks for sharing these very practical thoughts on what it takes effectively based on your experience. I think that's really, really useful as we are talking about methodologies and priorities. Hopefully we'll have time for a Q&A at the end of the session. Now on to Matthew Foote. Very, very pleased to introduce Matt. Matt is Senior Director at the Climate and Resilience Hub at Willis Towers Watson. In this role, he leads the analytics and science activities in support of clients across finance, public, and corporate sectors, and he acts as a technical advisor to the CCRI, which he will present to you in a minute, the Coalition for Climate Resilient Investment Management Team. Matt particularly focuses on the development of integrated physical risk analytics, data, and metrics to encourage investment in resilience measures to reduce physical climate risk to critical infrastructure and assets. Matt, thanks very much for joining us today. If you could turn on your camera. I have a couple of questions for you. The first one is, if you could please kindly provide a very brief overview of what the CCRI as well as the GRI initiatives are. And then my question to you will be, what role does and could satellite data play in supporting public good initiatives such as CCRI and GRI? Thanks, Matt.
Thanks, Antoine. It's an absolute pleasure to be contributing to this panel. Thanks for the questions. And for the audience's sake, I would like to highlight the CCRI and the GRI and what they are. And then obviously to show, I hope, where Earth observation data has a real critical role in supporting their initiatives. For those who aren't aware, the CCRI was launched at the 2019 UN Climate Action Summit, and it has a number of key objectives. Firstly, to facilitate understanding of both economic and social value at risk associated to climate change, and certainly at the impact of national scales. Secondly, it's there to provide investors in infrastructure with greater predictability of longer term cash flow impacts through new ways of looking at project valuation and investment and praising those. And then lastly, to encourage innovation in financial instruments and the way that infrastructure is supported going forwards, that are capable of guiding more efficient allocation of capital to new infrastructure. So Penny, please move the slides. Thank you. This is a multi-industry, multi-regional public-private coalition. It brings together many stakeholders and partners from countries through investors, engineering companies, data providers, financial institutions, and others, including international agencies, together to try and tackle these key problems of understanding how to best evidence the benefit of resilience to new infrastructure development, particularly over their life cycles. And so we're talking about 25, 30-year life cycles, which obviously then are extremely relevant to the climate change agenda and the time scales that we're looking at for climate change. And as that multi-industry public-private coalition, it's really looking for consistent approaches to the assessment of that risk and resilience, those time horizons, and then very importantly to bring that into the investment decision-making process. And I think, as Nicola and others have already said, that means you've really got to make sure that the analytics and the data and the intelligence that you're driving through these processes is fit for purpose. It's fit and it makes sense to the decision makers. And as Nicola definitely pointed out, that means that you've really got to understand what the end user decision points are and design to those. And so there's a really important element of this, which is to really understand how to work backwards from the decisions and then to design the analytics and therefore the input data feeds to make that effective and appropriate. And so Earth observation for the CCRI has a really key role in building the information base at scale to enable this on a global level to estimate and evidence risk and resilience benefits. Next slide, please, Penny. In addition to the CCRI, and almost a sister or at least a cousin organisation is the Global Resilience Index. Now, the GRI is another public-private collaboration which intends to develop and make available trusted, and it's an important word, baseline sources of open access modelling and reference data, which would be used as a common approach to assessment, quantification, and the disclosure, as people already said, of the physical impacts of climate change at a financial and other level across every country in the world. The GRI was formed in response particularly to commitments made by the Insurance Development Forum in December last year, particularly to support the aims of the COP26 financial sector team, which is led by Mark Carney. And in fact, Mark Carney only last week highlighted the importance of the GRI at the recent IDF summit, especially in support of TCFD and other financial impact disclosures. But there is actually a much broader use of the indices planned than that. So it would cover both green finance, but also humanitarian assessments as well. They're intended to be universally adoptable or universally used at a certain level. So both CCRI and GRI are effectively model dependent initiatives. They rely on the ability to forecast, they rely on the ability to assimilate information from different sources about hazard, exposure and vulnerability, and to try and deal with the complexities that Nicola particularly has highlighted around systemic risk and the ability to understand how to compare and contrast at the relevant levels the information that's available. So it's essential that the models and the indices produced are suited to that need. They're globally consistent, that they provide a mutual understanding of the quality and the provenance of that information, and that there is a level of trust, as I said, that the data is appropriate and can be trusted to be consistent, as I said, and applicable to the questions. So validation, as much as construction, I think, is an important component of those two initiatives and the tools that are developed from them. Now, one of the advantages, I think, of Earth observation data in all forms is that provenance. You know, we all know that data captured particularly by orbital platforms has to be post-processed, it's quality adjusted, it's validated, the biases are known, they're tested, and the post-processing further on is often undertaken using, you know, very robust and rigorous approaches. So there's a level of quality assurance with Earth observation data which is attractive to this type of approach. But of course, as David's pointed out already, data is never perfect, models are never perfect, and data has to be fit for purpose. There is a level of expectation around the data that's used that is important as well. And again, as I said, it has to be aligned to the decisions that are being made by those end users and the stakeholders in their respective areas. And in both of the cases of CCRI and GRI, those projects, this is probably the most important and key objective of the use of data that we're capturing. And in particular, I wanted to point out for EMDEs, the ability to support the provision of data where data could be sparse. Earth observation is obviously a good source, but it's not just for EMDEs, it's across the globe as well. Consistency is a major issue. Data gaps, as already pointed out, are a major issue to get consistency. In respect to the CCRI, the group has been working with specialist Earth observation organisations such as Lobelia Earth, to explore how we can use orbital platform data to capture and characterise the key physical characteristics of real assets at that location scale, but mindful, of course, as Nicola's already pointed out, it isn't just about the ground up. We need to look at the environmental impact as well, and I mean that in terms not only of natural resources and the nature base, but also the environment that assets are within, whether it's supply chain or more socioeconomic. So we have to look at it in those different scales and integrate that. And again, Earth observation data, and I think not only the data, but the processes that have been developed over the years are well tuned to do this. And so it's as much about the data as it is about the processes used when you're ingesting Earth observation data into these types of platforms that are equally valuable. And we can learn a lot from it as we build these models up. The availability of multiple sources now, and another big up to ESA with things like the open source as well, the Sentinels particularly, means that data is becoming more and more available. Added on to the sorts of things we've seen from others speaking today on the more commercial side, fusing this data together is obviously a key advantage, particularly when, as with CCRI, we're looking at trying to understand different types of assets and characterize different types of assets as effectively as possible. So the physical characteristics of a hydro plant compared to a wind farm or a transportation network, we've got to be able to capture those at a level of consistency and fitness that's appropriate to the analytical need. And so, of course, being able to capture the resolution of data, but also the consistency over large areas is critical. The last thing I wanted to say about that is, and it's been mentioned before, I think David mentioned this, it's not just about the physical part, it's about linking it to the other aspects, particularly for finance, that are relevant to the decisions being made for finance. And so it's important, obviously, that the location data of assets and the more geographic data is also connected to the less geographical elements of, for instance, ownership and legal entity and the financial instrumentation methods that are being used around the world. And so standards, as already been said, are critical to be able to link those things effectively, to make it consistent, and very importantly, that the cost implications are reduced as you do it at scale. And this is equally a major part of what's being developed around these global initiatives. The last thing I wanted to say, actually, I lied before, was that it's also critical that we're looking at it from a systemic basis. So we're not just looking at these things as assets, we're looking at the interconnections, we're looking at how they're changing over time, and the temporal aspect hasn't been mentioned much yet, but critically the trending, and the way that risk is not just about the physical climate part, it's about the interaction and the time varying dependencies between exposure, vulnerability and hazard together that are important. None of them stay the same. We've got to be able to pick that up. And again, my view is that Earth observation data, particularly as it's captured over longer time periods and in more density, is going to give us more appropriate ways of dealing with that. And so really, this is about scaling up, and it's about making things consistent and being transparent. So yeah, that's the major points I had. And just as Jean said, I mean, the major part is that this stuff has to be open source. It gives transparency. It gives people the democratic use of it. It allows more innovation, and it generates more confidence ultimately in the end use. So I think open access data is the way to go for these types of approaches, particularly. Those are my main points, actually, Antoine. Thanks.
Thank you so much, Matt. It was hard to interrupt you, but yeah, I mean, I think you raised all the key concerns or challenges, opportunities that we certainly have in mind. Maybe time for one quick question, if we could ask one of you, either one of you, to respond real quick to that one question within maybe 1 minute. The question is actually from Najwa, one of our clients from the Moroccan Central Bank, and it's, I think, very relevant to what we're discussing today, particularly in this session. It's about the practical use of satellite data in a data poor environment. Let's say I'm a country, I'm a central bank, and I'm trying to get an understanding of exposure to flood risk. Should I just pull out data from Copernicus, let's say, and use rainfall as a proxy? Or how can I integrate that satellite-based risk indicator into a broader sort of modeling approach? What would be the steps from going to downloading that data to making it something relevant to, let's say, a credit risk portfolio? Really quickly, if one of you could answer this question in a minute.
Shall I try?
Sure.
Well, I think first and foremost, I probably wouldn't start with the rainfall data. There's various openly available flood data sets. So I'd probably start there just as a starting point, and then use that to have a look at, are your key exposures in areas that are affected by flood, and just do a really simple sort of overlaying maps. And then I think if you find then that it is, you have to be careful, obviously, in using rainfall data to predict flood. But one thing you can do is look at, okay, for the key really intense rainfall events in the past, has my portfolio been affected? So, you know, how has the economy of my country been affected by flood? How has that affected my banks that I'm supervising in this case? So that would be my next step, and then my next step then would be to try to then use that rainfall data to do some sort of probabilistic risk assessment. But I'd probably start with those first two steps to check where are your key exposures, where are the key risks, and then you can really narrow down and use the satellite data where it's most needed.
Perfect, excellent, nice and succinct and very enlightening. Thank you so much to all our speakers, Nicolas, Fabio, Matt. I will now hand over to Benjamin Kutz and Olivier Mahul for closing remarks. And Ben, if you could switch on your camera, over to you.
Thanks, Antoine. And yeah, it's really a pleasure to join you today here and listen to this very inspiring discussion between these two worlds of the climate risk financing side and the Earth observation on the others. I mean, coming from a space agency, that is very inspiring and very, yeah, giving ideas how these data are being used and how these data make a difference in this very important topic of climate change. So let me thank you a lot for sharing your wide-ranging perspectives, how Earth observation can be leveraged to deliver comprehensive and transparent asset and risk information for the financing sector, which obviously in the context of climate change is of increasing value. And I saw today insurance or flood monitoring. I saw that peanut butter has something to do with forest sustainable management. That is things where we would like to see space data being used, and we really want as a space agency to support this kind of innovative part of working together. And I heard today also many comments about data quality, about open data, open source tools. All that is what ESA also wants to support and does support over the last decades leading up to the Copernicus program. But yes, ESA as a space agency has its core business to build cutting-edge satellites to monitor the Earth, such as the Copernicus Sentinels, and I heard many of them using them already, which is great. But we're actually already building on the future of them, and one of them is the land surface temperature monitoring mission, which will increase the resolution of thermal observation to 50 meters, a factor higher than the current operational capabilities. I mentioned that example here as Earth observation is not only allowing to monitor climate change to inform policymakers, but also to adapt to climate change, such as delivering information to agro-industry and how they need to irrigate the next day, and with that using water resources more sustainable in a more and more water scarce climate. This in turn can support anticipatory risk finance mechanism and proactive engagement, for example, mitigating risk of food insecurity and famine, but obviously also the flood insurance, as you have mentioned from your side. In order to create such benefits using Earth observation and mainstreaming these evidence-based information, ESA in the World Bank Crisis and Disaster Risk Financing team have established a strong technical partnership that fills the gap between demand and the potential application and integration of Earth observation into climate and disaster risk financing. This collaboration is part of what we call the Space in Support of International Development Assistance initiative, which is an innovative partnership with the World Bank to mainstream Earth observation derived environmental information in strategic development programs at national to regional level. And that has been prepared with the Earth Observation for Sustainable Development initiative over the last 10 years, and it's now really coming to fruition. As part of this partnership, ESA started the Global Development Assistance Program, which will ensure that new satellite Earth observation applications are being developed to a pre-operational level in response to bank and client country requirements. These pre-operation applications can then be taken forward and scaled up through standard development operations. As an example, we just opened 2 tenders in the Global Development Assistance Initiative, focusing one on climate resilience and another on disaster risk management, which will work on demonstrating EO capabilities as we discussed today here in dedicated World Bank operations. These collaborative activities, we are leveraging the cross-cutting expertise of different groups in ESA, and one would be, for example, data quality. I heard a lot today, this is necessary, and yes, we do have dedicated teams working on that, but also working on research, very important, and that is very much covered by the ESA Climate Office, what we have seen in the very beginning in the opening, up to mainstreaming Earth observation into operations, and that is these Global Development Assistance Initiative, for example, run in my office. In this context, so to conclude, we are very pleased continuing to collaborate with the World Bank Crisis and Disaster Risk Finance team and the development community as we are represented here today. I would like to mention here particularly Antoine, who under his special assignment at ESA in our team is essential to make this bridge between space and risk financing real. That is really also important to have the right people around the table. Thanks again for this constructive discussion today, which we will take as inspiration for our future collaboration. Thank you.
Thank you so much, Ben, for your comprehensive statements. And I will now pass over to Olivier for his closing remarks.
Thank you, Antoine, and I will be brief, but what a fascinating webinar. When you look at the list of the participants, the speakers, the panelists, it's quite amazing how bringing experts from different, I would say, themes and topics can really help move this agenda forward. I'll be very brief since we're already behind schedule, but really I wanted to, first of all, as I said, to really thank the speakers to bring their own insights, and also to thank Antoine and the team behind him to organize this fascinating event. Learning and also hearing and listening to the various presentations from the Ignites, which I found extremely interesting, and I appreciate it's very difficult in a few minutes to summarize a very complex but also very practical and operational solutions. And also listening to the panelists, let me share with you at least my 5 takeaways, and I'm sure that many of you may have different views. One is about data, data, data. We're facing a tsunami of data. We appreciate that there may be some gaps, it could be incomplete, imperfect, but we are facing a tsunami of data. And by the way, I'm quoting a meeting I had, in fact, at ESA with colleagues, including Benjamin and others, where in fact this notion of tsunami of data was used. So allow me to use it again. Number 2, the question raised was now how to use it, how to leverage the data, for what is the objective, what are the users. So the question is really to be able to extract the right data at the right time to answer the right question. And this is where analytics makes a lot of sense, and this is where it's very important to understand very well the data we're talking about, to be able also to answer the proper questions. Also under this use of data, mindful of what Nicola was saying about moving from an individual asset analysis to portfolio analysis, which leads me to the 3rd point I wanted to make about the importance of capturing the interactions, the indirect effects, and the transmission channels around the data. So not to think in terms of isolation, but really to try to have this kind of broader and comprehensive vision when we deal with data. The 4th point, which was made by Matt and others, is about open source and transparent data model. So how can we make sure that those data can be trusted, can be used, and also particularly can be accessed by all parties, including in emerging economies, which can be sometimes quite a challenge. And the last one, which to some extent derives from the first 4 points, is to bring the right technical expertise, but to find a place for this, to make sure that this expertise and these experts can really interact together. So whether you call it a clearing house or a facilitation place, you need to make sure that, although like we did today with this webinar, you need to give a space to each of these kind of experts to express their view and also to try to build out of that. And an initiative like the CCRI mentioned by Matt can definitely help advance this agenda. So I think we're just starting as we speak a long but fascinating journey to leverage space technology and the climate risk finance. And at least at our level, the partnership we're having with the World Bank and ESA will definitely help and hopefully will contribute to this long journey. So on that note, back to you, Antoine.
Thank you very much, Olivier. With that, we are happy to conclude this WebEx with huge thanks to our partners, our speakers, our client countries, who I know also joined from around the world, and ESA particularly. Stay tuned. We will reach out again in the coming months with another series of, let's say, proposed discussions and knowledge exchange events on this important and growing topic. With that, thanks a lot, everyone, and we will see you soon. Bye-bye.